The Federal Reserve moves markets at the moment with its 75 basis point hike. As we can see, the strongest performers, the Nasdaq and the Dow. The Dow up more than 520 points there. The S&P 500 up almost 3%. But look at the tech-heavy Nasdaq up about 500 points, about 4.33%. Well, let's break some of this down with VettaFi Head of Research's Todd Rosenbluth. He's here to discuss how the Fed's moves impact ETFs for this week's ETF report, brought to you by Invesco QQQ. So good to have you on. In this sort of environment, where are investors pouring into with ETFs?
So we're seeing a rotation. We've seen money moving out of fixed income mutual funds. About $300 billion has flowed out of bond mutual funds in the last 7 months. And we've seen $90 billion flow into bond ETFs. Investors are taking advantage through tax loss harvesting. They're taking advantage of the lower costs, and they're taking advantage of the ability to shift their exposure towards the less interest rate sensitive sides of the marketplace, as well as taking on some credit risk with high yield. And so we saw just yesterday an ETF SLQD. SLQD is the shorter term version of the more popular investment grade corporate bond ETF, LQD, and that ETF, SLQD, saw its biggest day of inflows in its history, according to our data at VettaFi. Investors wanting to protect against the downside of the higher interest rates that we're talking about today, but also getting some of that income through investment grade corporate bonds. So that's one of the areas we've seen strong interest, as well as high yield.
And what's the impact, Todd, on the bond ETFs, given the 75-point hike, and as well as what we heard from Jay Powell today?
So I think what's encouraging from the comments from Jay Powell is his expectations, and hopefully others as well, that we are going to avoid a recession. And if we're going to avoid a recession, then higher yield bond ETFs can make more sense within the portfolio. They invest in companies that have more credit risk overall, and you find that investors are wanting to take on additional income. We did a survey recently of advisors at VettaFi, and high yield is where they've been searching. And we saw some interest in a couple of ETFs that are a little bit under the radar. So HYDW is an X-Trackers low beta high yield ETF, and we also saw interest in HYGV. So let me go with HYDW since that's on the screen. This is a lower risk way of getting high yield exposure, and HYGV is a more value oriented version of the high yield bond market. So these are some of the smaller but yet growing ETFs that we're seeing within the high yield market that's gaining attention with our advisors.
Todd, I want to switch gears real quick. Another big story of the day is the tech earnings, or really I should say this week, because we had Alphabet and Microsoft after the bell yesterday, Meta out today, Apple and Amazon tomorrow. From an ETF perspective, what have you seen interest-wise in some of these technology-focused ETFs, and what do you expect during this earnings season?
So we're seeing that the bar is relatively low. I think Alphabet having strong stock performance today, despite having relatively weak and weakness overall. I think there's expectations that Meta is going to have a revenue decline. But I do want to clarify, in the ETF world, the sector classification really matters. So Alphabet and Meta are communication services stocks, according to the GICS framework. And so you'd find that in XLC, that's the communication services sector ETF, whereas companies like Apple and Microsoft and Qualcomm, that's reporting later on today, is what you'd find within the technology sector ETF like XLK or Vanguard's information technology ETF VGT. So if you're a sector ETF buyer, it really matters to know what's inside the portfolio instead of just assuming these are all technology companies. We call them technology companies, but from an index perspective, it really is the devil in the details.
It's important to make that distinction. Todd Rosenbluth of VettaFi, thanks so much.